Welcome, everyone, to Stock Talk. Today, we're doing a deep dive into SoundHound AI, specifically their first quarter 2025 financial results, which just came out on May 8th.
Yeah, definitely some interesting numbers to unpack here.
Absolutely. And hey, if you find this useful, please do subscribe, maybe give us a like or share. It really helps us out.
So, SoundHound AI, it's a story of, well, really rapid growth, but also some financial complexities we should probably get into.
For sure. I mean, the first thing that jumps out is that revenue number, 151% year-over-year growth, up to $29.1 million. That's huge.
It really is. Shows there's clearly strong demand out there for their voice AI stuff. But, growth like that, it's exciting, but it also brings challenges. Scaling up operations isn't easy.
Right. And it looks like they're not just a one-trick pony either.
Yeah.
Growing across different sectors, not just dependent on one big name.
Exactly. The diversification is key. They mentioned no single customer is more than 10% of revenue. That's healthy. Reduces their risk profile quite a bit.
Okay, but then we get to the profit side and it gets a bit trickier. They reported GAAP net income, $129.9 million. Sounds amazing.
It does sound amazing, but you got to look under the hood. A huge chunk of that, $176.1 million, is actually a non-cash gain. It's related to adjusting liabilities from acquisitions because their stock price changed.
Ah, okay. So it's more of an accounting thing than actual operating profit pouring in.
Precisely. If you look at the non-GAAP net loss, which kind of backs out items like that, they actually lost $22.3 million.
Okay, $22.2 million non-GAAP loss. That gives a clear picture of the core business, right? Still investing heavily.
Exactly. It shows they're still very much in that investment phase, spending money to grow.
But they do have a cushion. $246 million in cash and no debt listed. That's pretty solid footing.
Oh, absolutely. That cash gives them a lot of runway. They can keep funding those growth plans, investing in R&D, sales, without worrying about debt payments right now.
So I guess the big question hanging over all this is, can they turn this incredible revenue growth into actual sustainable profit down the line?
That's the million-dollar question, isn't it? Or maybe the $246 million question here. They've got the market traction, clearly. Now it's about execution and finding that path to profitability.
Okay, let's dig back into that revenue surge, 151%. Where's it all coming from?
Well, the report says it's broad-based, expansion across different industries. Seems their voice AI tools are clicking with businesses in a lot of different areas.
And like you said, that diversification means it's not just one hot sector carrying them. It's more stable growth.
Yeah, makes them much more resilient. If one sector slows down, hopefully others pick up the slack.
Right. Now, about those gross margins. They took a bit of a dive. The GAAP gross margin fell from nearly 60% last year down to, 36.5%? That's quite a drop.
It is a significant drop. The company flags costs from getting new big customers up and running and also integrating companies they've bought recently. These things cost money up front.
Sure. Scaling pains. Makes sense.
Yeah, often necessary costs when you're growing this fast. But it does squeeze margins, at least in the short term.
And the non-GAAP gross margin also dipped, down to about 50.8%. Still down, though less dramatically.
Right. The non-GAAP figure smooths out some non-cash stuff, giving a slightly better view of the core service profitability. But yeah, it's also down, which tells us the actual cost of delivering their AI services has gone up relative to the revenue they're bringing in.
So selling way more, but the cost per sale, essentially, is higher right now. Definitely something to keep an eye on.
Absolutely. It's that classic balancing act for growth companies. Spend to grow, but manage those costs effectively.
Okay, so zooming out to overall profitability again. That GAAP number, heavily skewed by the non-cash gain. The non-GAAP loss of $22.3 million feels more real for operations.
It's the number that reflects the ongoing business performance better, yes. And interestingly, while it's still a loss, it's only slightly bigger than last year's loss, even with that massive revenue jump.
So expenses are up, but maybe revenue is growing faster than expenses, or at least keeping pace.
Sort of. It suggests operating expenses are definitely climbing, but perhaps there's a hint of operating leverage starting to emerge, though they're still firmly in investment mode.
And we see that investment clearly in the operating expenses breakdown, right? R&D spending jumped quite a bit, $24.8 million.
Yep, up from $14.9 million. That's a big increase. Shows they're really pushing hard on developing new tech, keeping that innovation engine running.
Which you'd have to in AI. It moves so fast.
You absolutely do. And sales and marketing doubled as well, up to $12 million. They're clearly spending to capture the market opportunity they see.
Makes sense. Got to spend money to make money, especially when you're scaling. Now, they gave some color on different business segments, restaurants look pretty strong.
Yeah, that seems like a real growth area. Voice AI for taking orders, answering calls. They mentioned major pizza chains, Habit Burger, Casey's, Firehouse Subs, others. These businesses are seeing value in automating that interaction.
And automotive, too. Those partnerships with Tencent and NVIDIA sounds like they're positioning for the future of cars.
Definitely. Voice in the car, the intelligent cockpit, is a huge trend. Partnering with big players like that, especially bringing in generative AI capabilities, puts them right in the mix.
You wasn't just those two, though. Healthcare, financial services, getting renewals and new deals there, too, shows the tech isn't just for flashy consumer stuff.
Right. These are often tougher markets to crack, more regulated. Success there suggests their tech is robust and reliable enough for, mission-critical applications.
And then a whole list of others. Retail, energy, IT, telecom, travel, even fitness chains and luxury resorts. It really feels like voice AI is becoming, well, kind of pervasive.
It does seem that way. The range of applications they listed points to a really broad potential market. If they can execute, the opportunity is significant.
Okay, what about their strategic initiatives? They mentioned Amelia 7.0, talking about agentic AI. What's the significance there?
That sounds like a move towards more capable AI, agents that can do more complex multi-step tasks autonomously. That could be a big differentiator, moving beyond simple commands or Q&A.
Interesting. And they're connecting the dots, right? Taking their restaurant tech into voice commerce, doing pilots in cars.
Yeah, leveraging their core tech across different verticals. That's smart. Creates more value from the same underlying platform, makes the whole ecosystem stronger.
And those partnerships, pin drop for security, Power Connect AI for utilities. Seems very targeted.
Addressing specific industry needs or concerns like voice security or utility workflows makes their offering more compelling. It's not just generic AI, it's AI tailored for the job.
Plus, using channel partners, getting others to help sell their solutions. Global agriculture, OEM, tax prep company. Sounds like a good way to expand reach without hiring a massive sales team directly.
Exactly. It's a common scaling strategy. Leverage others' relationships and market access can be very efficient.
And finally, just continuing to enhance the products. That next-gen restaurant platform, the brand personalities for cars, they're clearly not standing still.
No, you can't afford to in AI. Constant iteration and improvement are table stakes. It shows they're focused on staying competitive.
Okay, let's swing back to the financials one last time. That balance sheet, $246 million in cash, zero debt. That's a strong position.
It really is. Gives them breathing room, flexibility to invest, weather any potential bumps in the road. It's a significant asset.
And cash flow from operations, while still negative, improved a bit. Using less cash, $19.2 million used.
Yeah, that's a positive sign. Moving towards better cash management, even while they're still investing heavily, you want to see that trend continue.
And that cash balance was helped by a stock sale earlier in the year, right? Raised about $67 million.
That's correct. That financing activity gave them a nice boost to the cash reserves, funding those growth plans.
Stockholders' equity also way up to $397 million. Generally a good indicator.
It reflects both the capital raise and technically that GAAP profit, even with the non-cash element, strengthens the overall financial picture on paper.
And minimal capital spending. They have an asset-light model, don't they? Mostly software.
Exactly. Not building factories. That helps scalability. As revenue grows, costs hopefully don't scale linearly. That's where you get operating leverage.
So looking forward, they reaffirmed their full-year revenue guidance, $157 million to $177 million. Seems they expect this strong growth to keep going.
Yeah, sticking to that guidance suggests management is confident in the pipeline and the market momentum they're seeing.
But notably, no specific guidance on things like adjusted EBITDA or net income loss for the year. Profitability timing is still unclear.
Right. That remains the key uncertainty. Everyone will be watching quarter by quarter to see how those margins and the bottom line progress alongside the revenue growth.
Management sounds pretty bullish, though, talking up their position where AI meets voice, the diverse customer base.
And those are valid points. It's a hot space, and diversification helps. They definitely have tailwinds.
Okay, so if we try to balance the picture, opportunities seem clear. Huge market, potential to cross-sell from acquisitions, integrating generative AI, those strong partnerships, expanding internationally. Lots going for them.
For sure. Plenty of the potential growth drivers on that list.
But the risks, or maybe challenges, are there too. Those rising operating costs, the pressure we saw on gross margins, competition, which is fierce in AI, making those acquisitions work smoothly, and really needing that cross-selling to pay off.
Yep, those are the hurdles. Managing costs, improving efficiency, fighting off competitors, and integrating everything effectively. That's the execution challenge.
So let's try and summarize the strengths and areas needing work. Strengths: amazing revenue growth, diversified clients, loads of cash, no debt, cool tech, good partnerships.
That covers the good stuff well.
Areas for improvement or things to watch: those declining gross margins need to turn around, operating expenses are high, the non-GAAP loss is still significant, they're still burning cash, and ultimately they need to show that this growth can lead to profit.
That's a very fair summary. They've proven they can grow the top line impressively. The next chapter is about proving the business model's profitability as it scales.
So for you listening, the main point seems to be SoundHound AI is firing on all cylinders when it comes to growth and strategic moves in Q1. Really impressive stuff there. But keep a close eye on profitability metrics in the coming quarters. That's the key piece still developing.
Exactly. How well they manage costs and improve margins while scaling up, that's going to be critical for the long-term story.
Definitely leaves you wondering, what impact will this agentic AI push have? Can these partnerships really accelerate things? And how will they manage that constant tension between investing for growth versus hitting profitability? Lots to think about.
Indeed. These are exactly the developments the market will be tracking very closely going forward.
Well, that wraps up our deep dive on SoundHound AI's Q1 results. Hope you found this analysis helpful. If you did, please do consider subscribing to Stock Talk, liking this, or sharing it around. We appreciate the support. Thanks for tuning in.